Hey folks, Dan Frio here with your opening bell for June 24th, 2025. So it looks like the markets are off to a good start today. We have a ceasefire, hopefully a ceasefire in the Middle East, and that's dropping oil prices, and oil prices are making everything better today. So I'm going to explain how that, oil prices and the unrest in the Middle East is affecting these things. Because you're watching this video, you're most likely looking to buy or refinance, and I'd love to be able to help you because I'm a federally licensed mortgage loan officer, licensed in all 50 states, and we have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? I'll give you that information at the end of this video. You're here for these things. So let's get to it. So let's get over to the headlines that we see so far for today. We got the Dow Jones almost up 400 points. It was up 300 points yesterday. So if you got out of the stock market about a month ago when everything was kind of crashing, hope you got back in because you missed a 600-point rally in the last 2 days. So that's just one piece of this equation. Next thing we're going to talk about here briefly is home prices. They rise again. They're starting to cool down. And then did you know the U.S. actually creates 1,000 millionaires a day? Can't wait to the comments to see I get down below. But the reason why you guys are here is right through here. We got the bond market. Right now, the MBSs are up 2 ticks. That basically means mortgage rates aren't going to do anything today. So we did have some information. The federal Chairman Powell, he spoke in front of Congress to give us some insight on what he's expecting to do with interest rates. So I want to go over to that caption for you to give you some consents on that because over the since Friday, we've had 3 other Fed officials coming in saying we need to start cutting rates. So let's get over to this interview right through here. We have CNBC giving us basically what Federal Chairman Powell spoke about today in front of Congress and what this ripple effect might have to do with these things over here. So let's get over to Steve Leisman to give us this breaking news from the Federal Reserve.
Fed Chair Jay Powell is out with some comments on the economy. This happened just moments ago, and our Steve Leisman joins us right now with more. Steve.
Becky, thank you. Fed Chair Jay Powell, in testimony before Congress today, will maintain his views on the economy, policy, and tariffs in his press conference last week, saying the Fed is well positioned to learn more about the course of the economy before adjusting policy. The Fed, he says, needs to prevent a one-time price increase from tariffs from becoming ongoing inflation, very much using the language he used in his introductory remarks before the press conference on Wednesday. Tariff effects, he opines, could be short-lived, or they could create more persistent inflation. Tariff increases this year will likely push up prices and weigh on economic activity. They're driving near-term inflation expectations higher. Long-term expectations remain consistent with the Fed's 2% inflation goal. The Fed's obligation, keeping long-term inflation expectations well anchored. Inflation has come down a great deal, he says, but they're still somewhat above the 2% goal.
So the Federal Reserve was created for 2 purposes, and this was back, I think, in the 30s. It was for price stability, aka inflation, and also to keep employment at maximum employment. So they have a balancing act to do. So they're trying to say, okay, we don't really want to do anything with rates right now because we can't ignite more inflation in the economy. But also, if we keep rates higher for longer, is it going to stagnate? And then you're going to see manufacturing drop and employment drop and everything else like that. That's why yesterday when we got the manufacturing indexes, it came in kind of right at point. The markets rallied on that. I didn't bring that up yesterday to you guys. So there's a lot of nuances in this data that you really have to pay attention to because all of it, and the reason why it's on here is it's affecting these things over here, and that's what I want you guys to realize. So let's get back over to his comments and see what he has to say for the rest of this.
The economy is solid despite the elevated levels of uncertainty out there from policy. Labor market is near the maximum employment level. Policy changes continue to evolve. Economic effects, he says, are uncertain. So, guys, if you thought or hoped he might concede or take a step towards some of his colleagues on the committee that are talking about a July rate cut, I do not see that in these remarks today. He's very much maintaining his I could go either way depending upon the data view that came out last Wednesday. Becky?
So that's his article there. So I'm still on the fence of Powell right now. Okay, because we still have the huge uncertainty of what tariffs are going to do. And we haven't heard in the last couple days about the big, beautiful tax bill. So where is all this in play with these things over here? So that's what we want to kind of talk about, and that's why I bring these things up. Right now, we got the MBS market up one tick. This is the mortgage bond that trades on Wall Street that people come and watch me every day to figure out what's going on with these things. And the reason why we watch this bond over here, you notice at the top it says MBS. That means mortgaged back security. So it's a mortgage bond. So why we follow this is because the yield in this bond makes up the biggest piece of your mortgage rate. So we follow the yields on this thing. So how do you do it? Well, this gives you the price of the bond. So all you need to understand is if the price of the bond goes up, then bond yields are coming down. In this case, it's a mortgage bond, so then mortgage rates would be coming down. Look at the 2-day trend that we have. Oh, geez, it gave back a lot. But if you look at the 5-day trend, look at this. We had in the last 2 days up, and away, and it turned right here. Is that turn going to bring us down to here? Well, that's our focal point. We're going to look at, if we hit 99.26, that's going to be our bottom, but I don't think it's going to be. I think we're still going to be up, and away. We still have some room to move. Here, I'll show you. We should hopefully move up to 100 here soon. So our catalyst right now is dropping down right in this area to 90. Hold on, let's go to a shorter term duration, a 5-day chart. Right through here, about 98.8, and we can run all the way up to 100. That's our gap fill. So looking at the mortgage rates in these bonds markets should be just basically be stable right now until we get more clarity from the Fed and more clarity on tariffs. So that's what we're seeing through there. If we go over to the economic calendar for today, let's go back through. Let's recap what happened yesterday. I broadened this out so you guys can see more and more of the data. But here's what we were talking about. The manufacturing numbers came in on point. We have servicing numbers came in on point. We had existing home numbers kind of came in on point. Everything yesterday came in with no shock and alls. So the economy right through here is looking pretty good. So let's get over to Tuesday's data. We have the Case-Shiller Index saying home prices. Last reading, the home prices were up 4.1 nationally. It was expected to be at 4. It actually went all the way down to 3.4%, but this is still a positive number. But not all areas of the country are seeing increases like this. So let's get over to Zillow for one quick focus. So I'm going to go over to Zillow. And what I want you to see on this is two different components. If you look over to the right behind my head, you're going to see here's some numbers that just came out. Okay, so home prices, they inched up once again. But the area I want you to see is right through here. We had rents. Rents are continuing to rally at 3, 4, 5% a year. So there's what's called the Rule 72. Okay, the Rule 72 is you take this factor here and you divide it by 72. So if in this case, 3.2 a year, 72, do the math. But whatever this equates out to equal 72 is meaning that you were double your money. So let's take it this way. If you have an average return on your money of 10% a year, what it's going to take is 7.2 years to double your money. Okay, so flip it around. If you're getting a yield at 7.2 a year, you're going to take 10 years to double your money. Well, how long is it going to take at 3.2% to have your rent payment double? Kind of scary to see that. So we're starting to see house prices stabilize. I've been calling this for 2-3 years. I said the sales are going to be dismal because people have that lock-in effect because of their rates, but you're not going to see prices deteriorate hugely in most parts of the country. Only those that everybody fled to and overbid on these homes and got into these houses way overpaying, and now they're feeling the repercussions. So most of the country is okay right now, and this data that we're getting so far in is actually on point as well. So as Becky said and Steve said, what you're contending with the government right now is, let's get over to the economy. This is what the Federal Reserve looks at right through here. Hold on, it didn't load up. So what the Federal Reserve looks at when they're looking to cut rates is they're going to say, well, the PCE, that's inflation. We want this at 2. Well, it's at 2.1, so that's pretty much as darn close as you're going to get. We have the unemployment numbers at 4.2. Those are stagnant. Look at the unemployment numbers for the last 3, 4, 5 years. They've been stagnant, and GDP kind of fell off a cliff. But this is rallying back as well because we had the Fed coming out saying this will probably be about 1.4 positive for the year. So economy over through here looks pretty good. Now it's the uncertainties of tariffs, wars, the big beautiful tax bill, and everything else. So again, if I'm the Fed, I'm probably sitting on the sideline saying, well, everything's going well right now. Let's just sit back and wait how this goes. But the one big culprit here is if the Federal Reserve doesn't reduce rates, Well, that's not going to cut the interest payments on all the debt that the U.S. pays. And that's one piece of the puzzle I'd really like to see come down. So that's what we're seeing in our report for today. So if we recap this, the market is across the board. Basically, the indices are up. We have the bond yields. They're ticking up as well. They're up 3 ticks. Basically, mortgage rates aren't going to do anything today. I think the markets are going to be stagnant unless there's a jolt with something. But when it comes to Thursday, I think it is, that's when a lot of the data is going to come in that really should start moving these things. So we're going to have a flat market today when it comes to bonds, but the stock market's looking pretty darn good. And I will be back with Stock Talk Tuesday today, where we're going to talk about this and our portfolio and a bunch of other things. But if you're wondering who I am and what I do, my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. That means I'm licensed in all 50 states as well as Puerto Rico. And the reason or how I do it is I actually work at a federal bank. So yeah, I'm a federally licensed mortgage loan officer and I work at a federal bank. But it's pretty unique where I work because the bank I'm at right now is we're set up with 32 other lenders. So you might ask why. Now, the why is because we're trying to help you guys. Because if you're out there looking to buy or refinance, what's your goal? Your goal is to make sure you're working with somebody you can know and trust, and they have the program for you. But then you're like, okay, a lot of people just throw that out the door. The first thing they ask is, what's your rate and what's your fees? So we're trying to appease you with that because most people, when they're looking to buy or refinance, they'll call this lender and that lender. They'll get 5, 6 different quotes. It gets really tedious, time consuming, and everybody's going to pull your credit. I wonder if you can do that with one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, that's how we do it. So you go to therateupdate.com. If you want to call me, find out a little bit more, just call 844-775-5626, or you can ask me a question right through here. Just says Ask Dan, or schedule an appointment here. And don't forget, if you're looking to buy, we have that 1% down program. So home buyers, if you're looking at a program that you qualify for, a lot of them only require 3% down. So this program is going to give you 2 of the 3% down, up to $7,000. Doesn't need paid back. It's not a lien on your property. It's virtually free money. So if you want to check that out, please give us a call. If you're actually looking to refinance or just working on your credit, check out some of these videos I have down here, but also go to YouTube. I have over 3,000 videos on my YouTube channel. So thanks for watching, folks. Mortgage rates will be stagnant today because the economic news isn't really there that we need, but I will be back with Stock Talk Tuesday to answer any questions you guys have on stocks, bonds, cryptocurrency, and even mortgage rates and home values. So thanks for watching. Can't wait to see you today at 2 o'clock, where I'm changing my time. I'm moving it forward a little bit, or backwards a little bit, to 2 o'clock to give me a little more time for my closing bell. So thanks for watching, guys. God bless. If you could do me one huge favor, if you're not a subscriber yet, please click the subscribe button over there. I'm trying to hit 40,000 subscribers as quick as we can. We're only a couple thousand away. Thanks for watching. See you at 2. Bye-bye.